ASEAN Business reports the top stories. Fugitive Thai former Prime Minister Thaksin reportedly seen in Dawei, Myanmar to study the implementation of the Dawei Deep Seaport project this morning. Myanmar announced the abolition of its US dollar proxy currency in the latest step towards economic normalization as the impoverished former pariah opens to the world. French finance ministers urged CYPRUS to come up with a speedy alternative to resolve its financial woes after it rejected the terms of a European Union bailout and turned to Russia for aid. Catch the latest on the economic beat within the region and stories from around the world with Dawei, KITTIRATT and CHATIKAVANIJ. This is ASEAN Business Report.
Good evening on Thursday, March 21st, 2013. You are watching ASEAN Business Report, broadcasting live from Bangkok, Thailand. I am Thaksin.
And I am Dawei, KITTIRATT. And tonight we also have a special, interesting news, actually,
Right.
From someone from afar has been on the move, and we've seemed to be having a lot of excitement every time when we hear where about he is, because it's also been a long time.
Right.
Now, I'm sure our viewer now knows who we're talking about.
And this very exclusive story is directly from our media partner, Yangon 11 Media, Dawei.
Well, the fugitive former Thai Prime Minister Thaksin has reportedly arrived at the Dawei airport this morning at 10 a.m. by his private jet, and it was, according to the news from 11 Media, at 10:30 a.m. he went ahead to the Dawei Deep Seaport project. And the report also said that he was visiting and studying the implementation of the project, the Dawei Deep Seaport project, where he went from Yangon to Dawei by air.
Right. And earlier in December, his sister Prime Minister Yingluck also traveled to Dawei to have a discussion with Myanmar President Thein Sein. A high-ranking official meeting between Thailand and Myanmar is also scheduled for next month to finalize details of the investment. The Thai developer, Thai Development, or ITD, will hold not less than 25% share of the investment. Thai and Myanmar government 30% each, and other individuals, such as Japanese, Korean, or Chinese investors, around 40%.
Right. Well, who knows why he is there to study the Dawei Deep Seaport project, but you know, that's one of the information that I don't think anyone would know if we don't ask him. But anyways, we will keep up with what's happening with the Dawei project anyways. There is also another catching up issue about the 2 trillion baht borrowing loan, which has recently been approved by the cabinet. Today we have an opportunity to earlier ask from the Deputy Prime Minister and also the Finance Minister, KITTIRATT about some concerning issues that the government bypassing the budget process, the annual budget process, is a concern. And here is what he has to say.
Well, of course, it seems that someone tried to say that this bill is a way to avoid annual budget. I agree that it is avoiding annual budget, because the weakness of annual budget is it's only take care of the expenditure of the government only within a period of 1 year. Investment in those infrastructure projects for transportation system normally requires several years, and it cannot be well handled by the annual budget, because if that's the case, you have to say that the rest of the budget from the first year budget will have to depend on the future annual budget, which may or may not come. So who on earth would have confidence that the project will be well invested until it finishes within a given period of time? So if someone tried to look at it in that way, I would say that the procedures or the standard of this bill is as good or even tougher than the procedures for the annual budget bill. Why? Because the project will be well selected by those government organizations who will be taking care of the projects. Then go to the cabinet, and after the cabinet, it will go to the House of Representatives, which is exactly the same procedure as the annual budget bill. The difference is that this will cover as long as 7 years until the end of 2020. That would provide very good confidence for all relevant people that those big projects will be well funded. And I think we can solve the weakness of the annual budget system. Well, I have to accept the fact that Thailand is not in the top list of the most transparent country. But by saying that, it doesn't mean that we cannot invest in anything. So if it's a good idea, let's go ahead and prove it. Then work on the procedures with all relevant parties, whether the anti-corruption office, whether the network of the private sector as the watchdog for the transparency practice, whether it's improving of the recommended bidding price, whether it's the other procedures that would require the most transparent, which includes the invitation of those bidders into the competition to win the project. Then action speaks louder than words. Let's go ahead and make sure that those who try to corrupt out of this project, put them in jail.
And Kunjarawi, still on the matter of the 2 trillion baht budget loan, the former finance minister in the Abhisit's administration, KORN CHATIKAVANIJ, strongly opposed how the government bypassed the annual budget process. And again, he has explained to us why.
Well, the projects themselves are reasonable mostly. There are some issues regarding priorities of some of the projects, especially with regards to the high-speed trains. But where we really object is the source of financing. First of all, we don't believe that these projects should be financed by loans only. We think the government could work a lot harder to ensure that there are other sources of revenue to support these investments. And where loans are required, we don't believe that they should be issuing a special law. We think they should be borrowing within the budget. And we believe that, in fact, issuing a special law to grant themselves additional power to borrow 2 trillion baht may, in fact, be in contravention of the Constitution itself, and we will be challenging it.
Well, there you go. Kun KITTIRATT said that whoever is involved with corruption, they should be make sure that they get caught in jail. While Kun KORN, I am sure he will be preparing this in the parliamentary process. But anyways, we're going to turn the globe and move on to another topic, which is Cyprus and its update, as the French finance minister has urged Cyprus to come up with a speedy alternative to resolve the financial woes after it rejected the terms of the European Union's bailout and turned to Russia for aid. Cyprus considered nationalizing pension funds and ordered banks to stay shut till next week to avert financial chaos. Crisis talks among the political leader in Nicosia resumed today after late-night meetings to discuss a Plan B broke up without a result. Now, Finance Minister Pierre Moscovici voiced little sympathy for an ambitious but now bust banking system that extended itself well beyond the island, saying European taxpayers should not have to bear the brunt. He said he had never wanted for Cyprus to tax depositors with less than 100,000 euros and suggested instead a progressive tax, whilst stressing that many of Cyprus's depositors, many of whom were non-resident Russians, had been enjoying a strong rate of return on their savings for years, and that it was time for the government to now find a durable and fair solution. Russians had told the European Parliament they did not favor more loans for Cyprus, but rather an extension of an existing loan at lower interest rates. And Kun Satapat, without a resolution yet, the fate of this small nation of just 1.1 million has shaken the confidence of the single currency Eurozone as well, and raised the geopolitical tension between the EU and Russia. Now, Cyprus's finance minister Michael Saras extended his stay in Moscow, where he went there yesterday, where Russian officials had asked him for a further 5 billion euros on top of a 5-year extension and low interest on an existing 2.5 billion euro loan from Moscow. But the ECB, the European Central Bank, has also kept its pressure on Cyprus, warning that if Cyprus did not come up with a solution, they might have to pull the plug unless Cyprus took a bailout quickly or come up with a solution probably by Monday.
Right, and according to Yahoo News, Kunjarawi, without the aid, ECB says that they will be insolvent and it requires bank to be solvent for them to receive central bank support, and the ECB is already offering banks unlimited liquidity with loans up to 3 months and reserves the option to provide them with the more funding certainty over a longer horizon by laying on another 3-year funding operation as it did a year ago.
Now, if we turn to a report from CNBC, Kun Satapat, they also have another point of interest, as with the Cypriot finance. And coincidentally, energy minister in Moscow as well, because the energy minister was said to be visiting for a sort of a conference there in Moscow. There was speculation, was also rife, that access to untapped offshore gas reserves in Cyprus could be on the table of discussion as part of the deal for Russia. And the finance minister, Saras, also said talks with his Russian counterpart, Anton Siluanov, will continue, but there had not been any offered yet, nothing concrete yet at the moment.
And also Finance Minister Saris said that natural gas reserves from offshore fields surrounding Cyprus that have yet to be developed could be offered as part of the agreement. Saris extended his stay in Moscow, where Russian officials said he asked for a further 5 billion euros on top of a 5-year extension and lower interest on an existing 2.5 billion euro loan from Moscow.
Right.
And also to focus more, Kunjarawi, on the issue, we also have a special report regarding this matter.
The urgency of Cyprus's bailout terms had reignited the European sovereign debt crisis. An important reminder to the past few months' relative calm that the financial embers are still very much alive. The small island with a population of a little over 1 million is now under great duress after rejecting the proposed one-off depositor tax levy to contribute to the rescue fund at the sum of 10 to 12 billion euros. The Cyprus government had amended the harsh deposit tax, renegotiating the levy to spare accounts with deposits below 20,000 euros. The rejection of the first bailout demands were unanimous, with 36 MPs voting against it, 19 abstaining and none in favor. The amended tax levy has placed a bigger percentage on higher savers, with depositors with less than 100,000 euros now proposed to be taxed at 3%, previously at 6.75%. Depositors with balances between 100,000 and 500,000 euros will be taxed at 10% from 9.9%. With these amendments to the bailout terms, the levy is expected to raise the 5.8 billion euro contribution to the total bailout sum. Depositors have been trying to withdraw the money from their banks since the deposit tax was announced early during the previous weekend, but to no success, as Cypriot banks have remained closed and the bank holidays were extended to at least next Tuesday. Capital controls are expected to be activated when the banks reopen. Outside Cyprus, response remains tense. Germany, the biggest national contributor to the bailouts of insolvent European Union members, face an unsatisfied public opinion of continuously giving up their national tax to rescue indebted countries from Greece to Ireland, Spain, and now Cyprus. Germany's finance minister expressed concern that Cyprus is not in the position to bargain, saying that the decision to amend the bailout terms may cause Cyprus banks to remain shut indefinitely. Russia's Vladimir Putin has called the tax levy to be unfair. However, Russia does hold multi-billion-dollar investments in Cyprus. The question that is seeing the Eurozone financial fears unravel before us once again is a groundbreaking depositor tax. It was previously understood that private deposits will be excluded from jurisdiction of the European Union policies. Fears of authoritative control over the people's deposit accounts have turned into authoritative fear of a bank run, in an event that would start the beginning of the breakup of the Eurozone. Cyprus bank shocks that is the cause of the current reigniting of the crisis stems from the Greece banking bailout mid-year of 2012. But the harsh terms of the bailout is unprecedented. Sovereigns have been blaming each other whether who came up with the bailout conditions. The Cyprus president said a plan B of the bailout terms is to be announced today. Again, it remains up to the European officials to approve and rectify the negotiations under the cruel memento of the financial powerlessness of the smaller countries to the supranational entity. At the end of the day, there are several options for Cyprus. Cyprus can declare insolvency and cause them to be the first nation to leave the euro. The second possibility is one currently underway, a revised deposit levy. The third is a 50% increase of the European bailout. And the last option is to seek help from Russia. Which decision will bear fruit matters not, as it is a difference between kicking the can down the road until the next country receives a bailout or undergoing the inevitable systematic restructuring of the flawed single currency union. Bailout after bailout, the point becomes clear that the euro single currency experiment is as liberating as shackles and chains. Analysis by Thaksin.
We're going to take a short breather from now as we return for regional updates, with Myanmar set to abolish the U.S. currency surrogate in preparing for its coming to join the world economy. Stay tuned.